What's up, guys? Welcome back to your favorite place to be, where we wanted to just update you and let everybody know that I'm heavily positioned in a market full of cowards. Now, let me explain. Wednesday's video, we broke down the entire Fed report. We were pretty much on the sidelines laughing the entire time because Jerome Powell basically came public to the American people and tried to say that inflation is 2.7%. Now, I'm not an economist, guys, but I am a macro strategist, and I will say that with oil coming up to $100 a barrel, and we've seen the margin calls today, it's absolutely playing out exactly how we thought. We saw margin calls today with gold falling, and now we're seeing the yield on the 10-year Treasury Note continue to creep up. I'm going to break down everything in this video so you clearly understand what that means, because I think a lot of people that clicked on the video are just basically scared and they are not knowing how to place their future money into their portfolio. So I'm going to break down exactly my portfolio, what I think is going to happen for you right now. So let's just jump right into it. I'm not going anywhere. I'm literally sitting right in front of you so you can absorb every single second of it. And I can be the authority figure that you need, because a lot of people, guys, are completely lost today. Their precious metal portfolio is going down. Their S&P holdings is going down. Basically anywhere they go in the red, and they're failing to recognize that the dollar continues to edge higher. All right, now what does that mean? The dollar edging higher means that other fiat currencies around the world, pretty much all of them other than the Japanese yen and a few others, are continuing to fall against the dollar. Now, what does that mean for the elite whales that are holding gold? Well, if they're trying to position themselves in gold, they're no longer interested in positioning themselves. Why? Because the price of gold is denominated in dollars. Similarly, how to all the world debt is tied to US dollars. So if the dollar continues to go up, what does that mean for the debt? It becomes more expensive for people to service the loan on the debt that they already have. And it's the same thing with gold. If they are in a country where their fiat currency is going down against the dollar, wouldn't it make us a lot of sense, guys, that they're no longer going to want to position themselves in gold? They're going to be wanting to go into dollars. That way they can get the yield that is currently tracking in the bond market, specifically the 10-year Treasury Note. Now, let me explain. What is the Fed doing? Well, the Fed is lying to you, basically, guys. They're trying to make it seem like the 2.7% inflation rate is actually accurate. So if you want to believe the Fed, you can. You can also go pull up to a gas pump and see the 5 or 6 people that just put gas in their car, and see the $20 or $30 they put in their gas tank car, because they don't even have money for petrol. They don't even have money for gas. And this is anywhere around the world. You can go anywhere around the world and do this. It's the same thing. Now, secondly, what we saw today in the markets was we saw gold fall. We saw the S&P fall, and most interestingly, we saw the big players in the S&P fall. Remember I told you guys earlier this week that there's only a handful of companies that are actually carrying new growth into the S&P? A lot of the bottom range S&P companies, they're already having problems servicing their debt. So what does the Fed do? Well, they can't raise interest rates, because if they raise interest rates, what's that going to do to that debt? It's going to make that debt more expensive to service now. Why? Because these companies are all tied to debt, ladies and gentlemen. If you don't know how the world works, it's all tied back to that debt. So what do we see today with the markets? Well, we saw a drop in gold because massive hedge funds and people that are over leveraged on the S&P are getting margin calls with dollars that are now more expensive to service than they were yesterday, right? So what are they doing? They're selling their hard assets, and they are paying that broker that won't stop calling them about their margin call. So what happens now, guys? Where is the market going right this second? And I'm going to kind of just jump right into it and basically reiterate why I am heavily positioned into a war chest that is in a market full of cowards, right? And let me explain to you. The coins, the crypto coins that I am positioned in, well, actually, let's take crypto out of it. Let's completely throw out crypto. So you don't want to lose you don't want to lose the interest of the video. Oh, he said crypto. Click, click, click. Go to a different video. All right. Let's say you're right. Let's say you don't want to hear about crypto. Don't you think that the Grayscale crypto trusts could be where the arbitrage takes place next, right? Let's look at LTCN. Let's look at BCHG. They all have pending ETF applications back already a few months back. They're already clearing the path to clear these ETFs even quicker. We saw this with the SEC and the CFTC come with a report this week that classified a basket full of cryptocurrencies as commodities, meaning they're going to be supervised by the CFTC, not the SEC. Now that is very important, guys, because a lot of these crypto Grayscale trusts are currently trading at between a 7 and 12% discount. So what is smart money going to be doing? They are going to be rolling their money into the anticipation, almost a guarantee, that these Grayscale holding trusts are going to be approved for ETFs. Now, what does that mean for the current discount that is happening on BCHG, LTCN? Look at Zcash. Look at the Zcash trust, guys. You guys need to go back and watch this if you guys aren't listening to me here. The discount is going to evaporate immediately. What does that mean? Well, you're going to get 10 to 12 to 7 to 12% gain on your investment immediately. So while the entire market is panicking, while retail is panicking, while hedge funds that are over leveraged in the S&P, while hedge funds that are leveraged at all are getting margin calls as that dollar creeps up and that yield on the 10-year Treasury Note creeps up, what is the Fed doing? They're sealing the fate of the U.S. economy. They are going to continue to see, we're going to continue to see inflation. That's going to continue to push that 10-year Treasury Note higher. That's going to make the 30-year fixed mortgage more. That's going to kill the buyer pools that are out shopping for homes today. If they go to get pre-approved next month or pre-qualified next month for a loan, they're going to be approved for less money. It's going to cripple the normal person. And for investors, what is it going to do? It's going to raise the cost of borrowing, not only for the investors, but for the companies that are on the S&P to service their debt. Their debt just became overnight since the Fed meeting more expensive to service. As we see that dollar head higher, as we see other fiat currencies go against that, and there are a few that are up, but most of them are coming down. We are going to see a sell-off in gold. We are going to continue to see a sell-off in gold. We're already seeing a sell-off in gold. We're going to continue to see a unwinding of positions in the S&P. Did you guys see it? The big companies in the S&P were down today. Did you guys look at it? And we're going to also continue to see a capital rotation into some of these Grayscale crypto holding trusts with the guarantee anticipation of the ETFs being approved for LTCN, BCHG, and they're going to reflect that spot price that is correlated to a NAV price that is attached to an underlying cryptocurrency that is also potentially primed for a super cycle. There's only going to be 21 million Bitcoin, but let's forget Bitcoin. I don't even hold Bitcoin. I think Bitcoin's kind of stupid, outdated, and basically a pointless computer software that past the hash power doesn't really have any relevance. Let's talk about Ethereum Classic. Let's talk about that. 210 million Ethereum Classic ever. There's only going to be 210 million ever. And the hash power jumped 5x since the Ethereum went to proof of stake. Did you guys know about that? And then also, let's talk about BCHG, which is, I think, currently got like 11% discount on their crypto Grayscale. Smart Money's already evaporated that discount to where it was at. It's actually more if you go back and look at the discount that was prior. So we are going to continue to see capital rotations into this privacy sector. And where am I betting on? I'm betting on privacy, for one, and then secondly, what am I betting on? I'm betting on foreign cryptocurrencies. I'm betting on NEO, right? I'm betting on a smart economy, not attached to the rising dollar, the rising yield on the 10-year Treasury Note, the 2.75 or 2.7% inflation illusion that Powell is going to have a heart attack on. And then also what we're betting on is that these cryptocurrencies are going to experience a super cycle. Where does retail have to go? You're about to find out.